Hello and welcome to Profiles in Risk. This is your host, Tony Cañas. And today we are recording episode, 230, 231, something like that. We'll see. Today I have with me Yann Barbarroux, CEO and co-founder, head of analytics at Otonomi. How's it going today, Yann?
Yeah, perfect pronunciation. I know my name is pretty hard. It's pretty good. I'm calling you from Brooklyn in New York. It's very sunny in the, I think mid-50s now. Yeah, mid-50s. We get sub 20 degrees for so long. We're happy to be in, I want to call it in a before taste of spring, so to speak. So.
Spring in the city. Beautiful, beautiful, beautiful. Or coming up spring in the city. At least you're not in Texas last week.
Oh my God. We can talk about that. That was painful.
Yeah, truly. So yeah, we always give the guests the chance to do the elevator pitch. What is Otonomi?
Very cool. So Otonomi is a B2B SaaS, so software as a service for insurance carriers. So you have to know that insurance is crippled with overheads in claims and operations, with over 40 billion lost to fraud and manual errors.
Mm-hmm. Yeah. I think my audience very aware of the fraud problem, so I agreed completely.
Yeah, it's a very cumbersome process and very painful. And our core value is to drive efficiency in operations by automating the claims. And we wanted to save as much as 90% in admin cost in certain cases. And we offer the first ever platform that unifies digitized policies and automating claims under a single digital asset, which eliminates the manual claims submission and project to return billions of dollars of unclaimed money to the consumers. And,
okay, so hold on. Let's dig into that, because that was a big sentence. Okay, so the first ever platform that what is it?
Unifies policies and claims under a single digital asset.
Okay. So when you say that, the first thing I think of is the Guidewire, right? The claims side of Guidewire. Mm-hmm. So do you replace Guidewire? Do you augment Guidewire?
Yeah, I think we have more of a grand vision to reform the operating model of the insurance space. Guidewire, a fantastic product. I don't think we're going to be replacing one for one. I think we have a grand vision that there's fragmentation, very visible fragmentation between policy underwriting and claim execution. And then it actually reflects in the wording, in the language. Policy. So the carriers, the underwriter call the clients, policyholders, and the claim TPAs call the end clients a claimant. It seems like
that's a very good point. I had never thought of that.
Two different people, but really, we're still talking about Kevin, Joe, and Jessica, right? And they've been having some car accidents, some travel disruptions, or business interruptions. And in insurance, they should be helping them as one single person. So
that is very true.
That's why we kind of connecting claim and policy as one unified asset. And everything essentially becomes a breeze when it comes to claim submission, claim resolution, because it's already pre-described properly, right? So,
okay.
Right. I think, a lot of people are doing some claim automation with RPAs and stuff. We going the other routes. We kind of reforming the back end. The backbone of operations are rebuilt from scratch.
Okay. So claims, Lemonade has made a lot of noise about the 3-second claims handling, right? For the one world record claim, somebody lost their coat, paid it in 3 seconds. The reality of the world of claims is most claims are open for a lot longer. And I did 2 years of claims, and what I remember from my claims training is that a closed claim is a happy claim. The longer a claim is open, the more likely we'll end up with fraud, with lawyers involved, with high expenses. Right, the longer it's open, the worse it is. So how will the platform help us do everything faster within and I love, by the way, I really love that you opened with fraud, because like my worry, and every other anybody who's gone through claims, my worry about the Lemonade 3-second claim is how much really did you prevent fraud that quickly?
Yeah, so I guess, we're not as aggressive as 3 seconds, right? The tagline is we do the job in 45 minutes instead of 45 days, right? So it's kind of
that's fantastic.
Yeah, that's what we're going after. And quite honestly, 45 minutes is, it's very conservative because literally we talk about minutes. Let's say 15, 20 minutes, but let's say 45 minutes instead of 45 days. And what's different with Lemonade, who's doing a fantastic job again, but we are more of a parametric and event-driven. We all about, kind of like defining, kind of the parameters that needs to be checked out and the kind of the predefined, loss estimates, beforehand in order to expedite the payment. So the 4 things where we excel at is, digital subscription, so digital distribution, detection of events, activation of policies, and streamlined payments, right? So, and those 4 components essentially having, very close touch of the pain points of the end customers, but also the B2B customers, which are carriers, TPAs, and distributors.
Okay, and so Parametric, I always feel like when we get into like deep technical insurance, especially Parametric, which I went through my AIC and my CPCU without ever hearing the word parametric. I've heard a lot in the podcast, but just in case, so parametric basically means a claim that pays when a certain parameter is met. You don't have to prove that it happened. You don't have to deal with a claims adjuster most of the time. It's like if the wind at my zip code was higher than this, we pay. Right. So what type of insurance are you aiming towards? Are you aiming for auto, for home, for well, you talked about business income. So are you talking about like particular businesses that you think you can really help?
Yeah. So I want to start from the beginning. And you said you went through your certification without hearing about Parametric. That's pretty amazing. I like that story.
It was 10 years ago, but yeah.
Yeah, but Parametric has been around for quite a while in the cat space, right? Nat cats, hurricane, disaster, you name it. So weather-related, climate-related. That part, goes well with, the current needs, and reinsurance is also already covering that part pretty well. We're going around more of a travel, transportation, and mobility. That's kind of our core expertise, right? So our starting point is air transportation. So you can think about, certain, status change in terms of, aircraft, some logistics in airports being, kind of like delayed, canceled, terminated. That would be essentially a binary event we can consume and ingest very quickly. And that would be issuing the refund to the retail clients or some sort of actors in the supply chain as well. So one thing that we are studying very closely is air cargo. So that's very, it's very exciting. So any perishable, any very mission critical, shipments that goes through cargo, air cargo, aircraft, can be very much impacted by weather-related, any logistics and traffic happening at the airport, as much as any retail traveler, right? So that part is, very underserved because there's a lot of language around loss or damages, but not delays. And you can imagine, like, whatever happened in Texas, you guys suffered quite a bit. All of a sudden, the supply chain in energy, commodities is disrupted. And those actors, they have to, chug in the cost. And who's paying the high price? Well, the end customers, right? The end customers being like, some of the guys paying $11,000 of Con-Ed bills, right? Because of the whole shortage throughout the supply chain of electricity and whatnot. So my point is, those micro events, actually higher severity, but that can be tracked very accurately, can follow a very parametric or systematic actually, activation and payments.
Okay, got it. So for travel, it makes perfect sense. And I had heard of other companies doing it for personal travel. Basically, like they can quickly they can keep stats on how often a particular flight is late and underwrite it that way.
Right.
But with cargo, I had not heard about it, and this is really interesting. So I started my career before insurance as a fleet manager for the largest privately owned flatbed company. So I dispatched truck drivers for the first 3 years of my career, and I distinctly remember getting into work at 6:45 a.m. and looking at the board and going like, okay, the first thing I need to do is call the clients on where the drivers are running late, right? So where we were supposed to deliver at 8 a.m. and I come in first thing in the morning and my guy's still 200 miles away for whatever reason, right? So I would call the company and let them know. And often it would be there would be like we need him here right now. This is going to shut down production for the day, right? We are just in time. Like, dude, I'm trying to, well, not dude, right? But sir, I'm trying to inform you that this 80,000-pound truck is sitting 200 miles away. He's not going to get there any faster than noon today, right? In the best case scenario. So for that kind of situation, I would have loved to be able. I wasn't in sales, but if I had been, I would have loved to be able to offer the shipper, insurance.
Right.
That if we're not there in time, insurance pays for a portion of your losses for that day because we weren't in time, right? Like that'd be a fantastic service.
Yeah. So I can bounce on your idea, and I talked to Sea Cargo and Marines insurance specialist last week, and the way they describe it is actually. It gets very real when you get through the events throughout the supply chain. So what's happening with cargo arrives and they arrive let's say half a day late, so even 24 hours late for some reason. What happened is there's actually some sort of roadblock and bottleneck at arrival because they're already like processing shipment that came in between, right? And in that case, they're like, well, we don't have storage for you. So what can I do, right? It's not like I'm going to be creating storage out of the blue. So they have to hire last minute, truck drivers, or they have to actually rent, some warehouse, maybe at proximity 10 miles away in order to like kind of mitigate short term. And this is extra cost in the supply chain that's you cannot compress, right? They have to suffer for it. And at the end of the day, that means like they have to price that in ahead of time. And therefore, price is up for distributor and price is up for the end clients, which is kind of receiving the goods, right? And all those kind of like point of failure around the supply chain is something that can be monitored, that can be automated for detection, but also to infer some sort of automated coverage, right, for each supply chain actors in this case.
That makes perfect sense. So how did you come up with the idea? What's the origin story?
Yeah.
For Otonomi.
Yeah, so I have a personal story and then one that's more like maybe professional driven. It was a couple of years ago traveling to Europe when we used to be able to travel. So visiting my family in France, and I got stuck in Heathrow, London, because of some snowstorm around Christmas. They literally lost 30,000 luggage, 1,000 or 2,000 flight delays and canceled. And I had to spend $1,000 on my own pocket to buy clothes, to buy last minute tickets and Christmas presents for my siblings, cousins, and so forth. And that $1,000, was for me to just sit on. And then when I filed the insurance claim, it took them 9 months to get back to me. I received the letter, and the letter saying here's your $400. That's all we can do for you. And that was a check in the mail. I'm like, something's got to give. My God, my friend, this. So,
did you go through your credit card company, or had you purchased insurance through a major carrier, and yet the service was that bad?
That was a credit card. There was a credit card that was coming up after the airlines. But this is all interconnected, right? So that means the credit card, the airlines need insurance to back that kind of event, but nothing is communicating properly. Everything is fragmented, And at the end of the day, like, you hope for the best, which is, this is the worst, kind of experience for the end consumer.
Yeah, that's pretty bad. That's pretty bad.
Yeah,
So,
and then I wanted to go to the second part of my story, which is more kind of on the professional level. So I'm kind of a 17-year veteran in capital market risk management and digital assets, and I worked in one of the big bank in New York. I'm not going to name names, and it was a fantastic experience. And I was in the Ventures Innovation Group, working for them for years. Super project, great, experience. But what I learned as well is, innovating from within corporate Americas was not my strong suit, and it just kind of pushed me like around the cliff, and it pushed me to just create my own startup and jump ship. So that was the source of motivation at that point.
okay, and so I have you on LinkedIn as doing. Oh wow, hold on. As doing this since August of last year. So the company's less than a year old, and it sounds like you've had some success already, right? You are in an accelerator and had your angel round. Tell us about that.
Yeah, thanks for asking. So just to preface, we did have some prototyping with a different name in 2019. That was more like a direct-to-consumer version of our platform. So we kind of learned quite a bit, and we pivoted to B2B. Second half of 2020 last year, and at that point, we bootstrapped, so created our own MVP platform from founders' money. That was great, but we needed leverage. So we went to our circle in Wall Street, blockchain, digital assets, and insurtech, expert in the space. We raised our angel round last quarter of 2020, which enabled us to launch V2 of the platform. So we kind of halfway in development. And that development is all around opening up our infrastructure to the rest of the world. So we did huge amount of work in terms of creating API documentation, connectivity with payments, detection systems, also activation policy and pricing connectivity with different actuarial and risk scenarios. We build our own pricer and our own risk scenarios analysis, but we mindful that some carriers wants to use our operating model, but their pricer. So we want to be flexible and modular in that aspect. And then, while we're running, we were raising the angel round, we sent out applications to the EERA program, which is the Entrepreneur Roundtable Accelerator in New York. Fantastic organization, and they have great footprints in fintech, insurtech, and other technology stack. And then we get lucky to be accepted. So we are part of the Winter 2021 program.
Congratulations.
Yeah, thanks a lot. It's all about go-to-markets and relationship with investors.
So ERA, I believe that you're the first ERA company that I run into. So I see a lot of plug and play. I see a lot of GIA, Global Insurance Accelerator. ERA. Are any other insurtech specifically that you can think of that came from ERA?
Yeah, so there Seago, you might know them actually because you have background in Latin America. So Seago, they are a car insurance distributor for Latinx, so Latin American community in the U.S. I think they're based in Texas, actually. I might be wrong. So they came out, I think, last year or 2 years ago. Very strong business model. Really like what they do. Another one that just came out a few months ago, Naya. They are healthcare, and they're doing a fantastic job in terms of automating and doing different things. And they raised, I think, $11 million of Series A. Fantastic job. So, yeah, insurtech within ER is actually pretty big. So I'm going to be inviting more of the next cohort to meet you. I think it's
awesome.
It's a great
I'm happy to have any of them on the podcast. Absolutely. So you mentioned just before we started recording that you've got the first pilot program. I actually don't know if it was the first, but you have a pilot program going. So tell us about that pilot program.
Very cool. Thanks a lot for asking. Yeah, so we went live with our technology platform back in the fall in 2020. And as I said, right, so we had a little bit of work to be done on the open API front. And now we are at the point that we sign an agreement with transportation distributors and travel in order to monetize our product and our policies. And we're starting the beta pilot in next few weeks, so in March. And we believe that between 60 to 90 days, we'll probably go live with an official launch throughout the summer.
Fantastic. So for the listeners, it sounds like if venture capitalists that listen to us, sounds like Series A will probably come later this year. I'm happy to
seed funding. Actually, seed funding this year. Yeah, Series A next year. Yeah.
Oh, okay. So it's that seed round coming up this year. So if this sounds interesting, I'm more than happy to make an introduction to Yann, and I won't even charge you a fee for that. And also, other people that could be listening is the funds owned by carriers, because I'm friends with several people who work at different carriers and run their investment operations, not their venture arms basically. So anyway, that's interesting. So if who is the client at any particular carrier? So what I mean by that is for example, if IAT, which is a big commercial transportation carrier, or Great, what are they? I think Great Western is a trucking carrier, or I don't know, the New York limo carrier. I can't remember their exact name. I've chatted with them a couple of times. I think they're called the Black Car Fund. So if any of the listeners are a big commercial auto type carrier, who do you really want to talk to? Is it the head of product? Is it the head underwriter? Is it the CIO? Who's the target client for you?
Yeah, target client is the carrier, claim departments, and kind of automation of processing, right? So this is kind of the people we want to bring the most value to. We believe that this alarming pain points, as we said at the beginning of the call, around overheads, frauds, expenses due to and then impacting in loss ratio directly, because it's not only OPEX, is just the performance of the company that's being impacted. So those people that are decision maker around creating new programs with new products in order to automate their claim process and expediting of the operations is who we want to talk to.
Okay, fantastic. And are you guys going to be at Connected Claims or any other I'm guessing virtual conferences for the next few months that would be a good place to check you out if we're going to?
I haven't signed up for that one, but definitely gonna check it out. We'll be, probably attending. I'll be a speaker at some of the InsurTech New York events throughout the summer. I heard, some of them are going to be, in person, so it's pretty, kind of optimistic. But if anything, vaccine might come, sooner than we think. So, it's possible that we'll meet in person sooner or later. But at the end of the day, we still want to be present, in every type of situation. We have a big community in, blockchain, digital assets, and deep tech. So we'll be part of this, technology community. In terms of insurance community, I mentioned InsurTech New York, InsurTech Inside as well. It's pretty big. But happy for suggestion as well. I'm very, very excited for those conversations to go on.
Excellent. And while you are U.S. based, I'm assuming you'd be happy to work with AXA or Aviva or some of the European carriers if they're interested.
Yeah, absolutely. So I'm French myself. So AXA is a close cousin, I want to say. And then we talked to Generali and other carriers in Europe. One of our fantastic advisor, Yuri, is actually based in Rome. So we still have like a very strong footprint in Western Europe. And I want to say, like, we're very excited about some of the more niche markets, such as motor insurance in Eastern Europe, that we're kind of discovering and exploring. I think there's actually even more, innovation that's glaringly needed there. Some of the framework are dated from 1962, as far as I understand. So that part is like, it's not nice to have or must have. It's like a super must have that we need to like approach and address.
Okay, got it. So I think that the emerging market makes a lot of sense for Parametric generally,
Yeah.
because the more that we can lower the cost of claims, the more
Yeah.
that it makes sense in the emerging markets. So that's been a lot of fun. That's all I've got when it comes to questions. Looking forward to see what you guys, how you guys evolve and transition, and what is the word pivot as you continue growing. It sounds like an excellent idea. So yeah, keep me posted on as you guys graduate from ERA and as you hit the conference circuit.
Yeah.
Look forward to see what you guys do.
Tony, that was a pleasure. Thanks a lot for having me. Great conversation, great questions, and I'm super excited about 2021. It's going to be a very, very interesting year.